Hi, I'm Pattu from FreeFinCal, and today I have released a screener for Nifty 100 stocks where you can look for stocks with momentum and low volatility. You can get the screener from the link in the description box. This is a video in which I'm going to show you how to use the screener and screen for stocks. Before I talk to you about momentum and low volatility, I wanted to tell you that I have now stopped giving the screener file for free because there's been cases of misuse and abuse of such files, and people take it for granted, and I'm sick and tired of that. And also I can, by charging a nominal fee for these sheets, I can now deliver much better products because you can get data from professional data sources, and it will also help fund these data sources and other softwares. So it's just you can go to the InstaMojo link in the description box. The screener file is just 100 rupees. It's actually 111. So 11 rupees goes to the transaction portal. That is 11 rupees goes to InstaMojo, and 100 rupees is the price of the sheet. So this is what you will get in the sheet, and I'll explain the columns first and then show you how you can use for screening. So the first column is just the symbol of the stock, the name of the stock, the industry the stock belongs to, the market cap as on February 28th, 2019, the weightage in the Nifty 100 index, the date on which the analysis was done, that is 26th March 2019, the market price on that date, and then the last 200-day average of the price, of the closing price. And we check if the current market price, that is the CMP, is greater than the 200-day average or not. If it is above, then the value is 1. If it is not, it is 0. Then we calculate the standard deviation of the daily returns. Then we calculate what is known as the standard deviation of the logarithmic returns. I have explained what is the difference between the standard deviation of normal returns and log returns in the post. I don't want to discuss that here. This is the 1 year return, annualized return, which is the same as the absolute return. The analysis was started on 26th March 2018, so 1 year ago, and 247 daily returns were analyzed. And out of those 247, how many of those daily returns were positive is mentioned here. So the percentage of positive daily returns is given here. And this is known as R squared. So R squared tells you if you calculate the standard deviation of the stock's price, how much of that standard deviation comes from the movement of in the index. How much of that standard deviation in the stock comes because of the index movements. So that's a correlation between the stock and the index, that's known as R squared. Then there's something known as beta that tells you how volatile the stock is with respect to the index. So it's a relative volatility measure. However, beta is useful only if the R squared is high. I think that is not the case for any of these stocks, so don't worry too much about R squared and beta. They're just there. Then there is also the absolute return for the last 6 months. So coming back to this, we'll first talk about what is momentum investing. Momentum investing simply means that you look for stocks that have moved up over the past 6 months to 12 months, and you invest in them in the hope that the momentum will continue. When the momentum stops, you sell and buy another stock with momentum. That's called momentum investing. But you can't just look at point to point, between the last day and the 365 days before, between the last day and 6 months before. That's only point to point return. So you cannot do that. You must look for the quality in momentum. That is, there is a difference between a stock, between these 2 points. There's a difference between a stock that moves like that, and there is a difference between a stock which moves like that. So you need to pick stocks with low volatility and momentum. So that's one way of investing. The other way of investing is to forget about momentum and look for absolute low volatility. That's called, you look at the standard deviation and you look at stocks with just low volatility alone. In momentum investing, the buying and selling will be frequent, so you must be ready for that. In low volatility, at least among the stocks in the Nifty 100, if you choose the top 10 low volatile stocks, they have not changed too much. So in that sense, it's a little bit better, I would say. So let's get back to the screener, and I'll show you first how to choose momentum stocks with low volatility. So the first thing is, we must first insist that the absolute return in the last 6 months of the stocks should be greater than 1. So let's say filter greater than 0. The return should be greater than 0. The last 1 year return should also be greater than 0. That is, it should be positive. So that itself will restrict a lot of stocks. So sorry, that did not come through. So greater than 0. Yeah, so you can now see that the count, if I just insist on these two filters, 100 stocks we started with, and so the count would have now become just 36 stocks, right? So that's nice. Now we are also going to insist that in the percentage of positive daily returns, out of 247 daily returns, at least 50% of them or more than 50% of them should be positive. That is again something that we are going to insist. So that will bring this down further, and you can see that you have a much shorter, now you have just about 25 stocks to choose from. That's a good short list. And then, so that's the momentum. You're now taking care of the momentum. And then what we're going to do is to sort the standard deviation in terms of increasing standard deviation. For the purpose of this screen, there's not much difference between the standard deviation and the standard deviation of log return. So don't worry too much about that. If you sort this will also get sorted the same way. So those are the stocks with the lowest of standard deviation. I'm not going to show you what those stocks are. You have to use the screener. I'm going to be a little cheeky on that, but you can guess what those stocks are. You can do one more screen. You can also insist that the current market price should be greater than the 200-day average. That means that that's the quality of momentum. So that's it. So now you have a nice short list of stocks with good momentum and low volatility. You can choose. So oops, that's like 23 stocks. So you have now sorted them in terms of standard deviation, and so you can just choose top 10 or top 5, and you can decide how much you want to buy. You can buy equal amounts, or you can buy 1 or 2 stocks. However way you want to play, you can play, but please be careful that if you're going to choose momentum with low volatility, then if the momentum drops for some reason, then you have to sell the stock and use this screener for another month, and then redo this filtering and then choose another stock with momentum. If you don't want momentum, you can simply look at the standard deviation alone and then screen stocks. That's also possible. But ensure that the standard, but if you choose standard, there is a stock which goes down like this, will also have low standard deviation. So even if you choose low volatility or low standard deviation, the quality of momentum is important. So that must also, the return should be at least positive. So you must also need to, when you're doing momentum investing, what you do is you've sorted this. You can also sort this in terms of descending. So this is the stock with the highest momentum, and you can see the volatility here. And this is the stock with the these are the stocks with the highest momentum. What you can do is you can calculate the median of the standard deviation and filter stocks which are filter out stocks which are above the median. So you're going to only use. So the median divides the data points into 2. So you have the set of data points and you have the median in the center. Choose the lower part. Those are the stocks with the highest momentum, that is a 1 year CAGR, and low standard deviation. You can do that as well. So for example, I can do that. I'll show you how to do that. So you can calculate the median value of the standard deviation. Oops. That's the median value. So you can see that 0.0185. So you can say, I go back here, you can say less than 0.0185. Right? So that's the standard. So all those stocks have, I hope that's correct. I think that did not come out. 0.0185. Oh, that did not come out. 0.0185. That's it. So now you can see that these are the stocks with less than median standard deviation, and then you can now sort. You have sorted it with highest momentum. So these are the stocks with the highest momentum. You can choose it that way. So either you chase after standard deviation and you insist on reasonable returns or reasonable upward movement, or you chase after momentum and you insist on somewhat reasonable standard deviation. If you chase after momentum, please be aware that the stocks will keep changing. The top stocks will keep changing, and you will have to buy and sell frequently. If you chase after standard deviation, at least amongst the Nifty 100, there will not be much change. At least in the top 10, top 20, 30, there will not be much change. You can reasonably hold on to the stocks for some period of time. So there are multiple, I have made videos on this, on low volatility investing and momentum investing. You can have a look at that. I will link also posts. I will link all those links in the description box. So if you're interested, you can use the InstaMojo link in the description and purchase this sheet and have a go at this for yourself. So that's what I wanted to say. I'll catch you again in another video. Bye bye.